Hello class, welcome to the second video for your FA1 chapter 7. So in the first video we have tried the classroom exercise 7.1 on how to use first in first out to value the closing inventory value. So 7.2 and 7.3 I will suggest that you try yourself and the answer is provided, and we can discuss this in our live session if you have any question. So let's look at the next method. The next method is called last in first out. So what is last in first out? The last item of the material received are the first item to be issued. Last in, first out. The item remaining in inventory are the first which were produced or purchased. So let's return to the previous page. It says that the use of last in first out is no logic. That's why the last in item have to be first out. That's why IAS2 not suggesting the accountant using last in first out to value the closing inventory. So let's start. Classroom exercise 7.4. So you can see that this is the exactly same question as per 7.1, but we try this under last in first out method. So similarly, I have 200 units of the inventory at end of November, and the total value is 800, and now we have to compute the value of closing inventory under last in first out method. And similarly, last in first out, the left hand side is in, the right hand side is out, and we start from the opening. The opening is from 1st of December, 200 units and $4 each, so the total value is 800. Next, we purchase 1000 units at the value of $5 each. So 2nd of December, purchase 1000 units, $5 each, so the total value is 5,000. We use multiply quantity multiplied by the unit price, we get the total value. Next, on 5th, we sold 700 units at the selling price of $7.50 each. Again, selling price is irrelevant information to us when we prepare the inventory account, so we only look at the 700 units. So on 5th of December, we sold to our customer. The quantity they want is how much? 700 units. So according to the last in first out concept, the last purchase item will be the first item to issue. I repeat, the last purchase item we have to first issue. So our last purchase item before we sold is 1000 units, right? And this 1000 units is enough to cover the customer order, so we will write 700 units here. Unit price, we use this batch, the second batch, because last in first out. The cost for this batch is $5 each, so we use 700 times 5, we get 3,500 as the cost. Remember, in the inventory account or material account, we only record the cost of the item that we sold. Next, on 12th, we purchased 800 units. 12th, we purchased 800 units at the value of $6.20 each, so total value 4,960. And on 15th, we purchase another 300 at the cost of $6.60 each. So 15 December, purchase again, and this is 300, 6.6, so total 1980. And we look at the next transaction. The next transaction is on 31st. We sold 400 units at the selling price of $8 each. And again, this is selling price irrelevant information to us. So last in first out. What is the last purchase item before we sold? This, right? 15. So we can write 31st of December first. So last in first out. So we will utilize this batch first. 300 at the cost of $6.60 each. Total value 1980. But this 300 is not enough to cope with our order. Our order is 400. So another 100, we have to use the last 3 batch, the last third batch, which is 800 unit at the cost of $6.20 each. So we use this, and then the total is 620. Last in first out. First, we utilize the last batch purchase, but this batch is not enough to cope with our order. So we will use the next last purchase, which is 800 unit. So the cost is $6.20 for this batch of the product. Next, on 28, we sold 500, and we know that for this batch, right, we have a remaining 700. For this batch, we have a remaining 300, and this batch we have a remaining 200. When you prepare this, you can use the pencil to note down what is the remaining balances after you utilize the stock, and the 300 is fully utilized. So on 28, we sold 500 unit. So this 500 unit, we should use batch 1, 2, or 3. The answer is we should use batch 3 because last in first out, and we still have 700 unit in this batch. So we will use the cost for this third batch will be $6.20, total 3,100, and this batch will change to 200 unit. So after that, we can do the closing. So the closing will be at the end of the month or end of the year, and 2003 minus 1006, we get 700. And what is the value? We use 12740 minus 9200. The answer 3540. So if your in and out can be tally, it means that your answer is correct. And take note, for the closing, right, we no need to provide the unit price because the price for this batch of the product may involve a different batch. So we are not required to provide unit price under first in first out or last in first out. I repeat, we are not required to provide the unit price for the closing inventory under first in first out and last in first out. Just leave it blank will do, because this batch of the product will include different batch. The closing inventory will include different batch of the product. So same to your first in first out, last in first out, we can do the testing as well. So this is for your last in first out testing. So the remaining stock we have is 700. So this 700 units can refer to what? Can refer to the earlier purchase. The most earlier purchase will become your closing inventory under last in first out method. So let's take a look. For the 1st December unit, we have 200. The cost is 4 each, so we get 800. And for the second batch, we have a remaining of 300. The cost is $5 each, so we get 1,005. And the remaining 200 is from the third batch of the product, which is on 12. The price is 6.2 each, So what is the value? 200 times 6.2, we get 1240. So we write 1240 here, and the total value 1250 plus 1005 plus 800. So our answer is 3540. So if you can make this 3540 with your working here, it means that your answer is correct. And there are some exercise for you to try. You can try 7.5 and 7.6. The answer is provided for you. So let's do some comparison between your last in first out and first in first out. So let's delete this first. You can see that no matter which method you use, the closing stock quantity will remain the same as 700. There is no changes in the quantity. The only difference is the value. You can see that only they will result in a different value. Why? Because the way they recognize the cost of the item that we sold is different. You can see that the in item, they are exactly the same. For the in, they are exactly the same. Only the out is different. Why? Because different method, they are using a different cost method. First in first out, we use the item that we purchase first as the cost. Last in first out, we use the last item that we purchase as the cost. So I hope that this table is a very good comparison for you to understand the meaning or the features or the difference between your last in first out and first in first out. Next, we are going to prepare our closing inventory under weighted average method. So weighted average cost method. This method calculates a weighted average price for all units in inventory. Issues are priced at this average cost, and the balance of the inventory remaining would have the same unit value. It means that we will average the cost of our stock when we issue. A new weighted average price is calculated whenever a new delivery of material into stock is received. Hence, fluctuation in price are smoothed out, making it easier to use the data for decision making. So we are going to try classroom exercise 7.7. So let's see what are the difference between weighted average cost as compared to our first in first out and last in first out. So for the weighted average cost method, the presentation method is a bit different. So we only have one side. So similarly, we have that, we have description, followed by quantity, unit price, and total. We only have one side. We don't have in and out, we just have one side only. So similarly, we start from the opening balances, 200 unit at the price of 800. So we will indicate 1st of December. So this is our opening. We have 200 unit. The total value is 800. So the cost is, we use 800 divided by 200, we get 4. Next transaction is on 2nd. We purchase 1000 unit at the price of $5 each. So 2nd of December, we write purchase 1000, 5, and 5000 here. If you find out that the unit price for the earlier transaction is different as compared to the current transaction, you need to do one thing called weighted average. How to do the weighted average? First, you get all the quantity up to the that of weighted average, which is 1002, and you get the value of the total stock, which is 5800. Next, you use 5800 divided by 1002. It means that you use the total value divided by the total quantity in order to get the weighted average price. So we use the round off function. so you will get a lot of decimal point, right? So for the ease of presentation, we always round off up to 2 decimal point. I repeat, how we do the weighted average. If you find out that the previous transaction and the current transaction is having a different unit price, what you need to do is do the weighted average. How we do the weighted average? We sum up the total unit first, we sum up the total value, and then we use the total value divided by the total quantity to get the new or weighted average price. And this weighted average price, you only need to round up to 2 decimal point. I repeat, the new weighted average price is only required to round up to 2 decimal point. Next, on 5th, we sold 700 units, right? So we will write 5th of December. So for the sold item, we put a negative because the sold item will reduce our overall balances. So here, what is the cost for this 500 unit? We use the new weighted average price. I repeat, how to determine the cost of this 500 unit? We use the new weighted average price. So we use the quantity multiplied with the new weighted average price, we get the total value. Next, we purchase 800 units, right, on 12th of December. So what we need to do is we also have to get the latest value. And what is the latest total value? And then we do the weighted average. So due to some routing issue, you may find that the amount may be different, but which is okay. Okay, we put it as the same, 4.83. And then the next item is on 12th of December. We purchase 800 units at the cost of $6.20 each. So for purchase 800 units, 6.2, so we multiply together. If you find out that the unit price is different, the next thing you do is do the weighted average. So it means that we have total 1,005 units of the product up to 12th of December. The total value is 8,345, and the weighted average cost is $5.50. So you may get a small difference between my computation because I'm using Excel. So you just follow this value. A small difference is acceptable. If the difference is due to routing issue, that will not be a problem when I mark your exam paper. So don't be so particular on the minor things. I repeat, don't be so particular on the minor amount. Next, on 15, I purchased 300 units at the cost of $6.60 each. So 15, I purchased 300 units at the cost of $6.60 each. So the total value I have is 1980. Again, when you have a different weighted average price, we do the weighted average again. So total unit we have up to 15th of December, 1,008. Total value 10,325, and the weighted average price is $5.74. Next, on 21st, I sold another 400. So 21st of December, sold 400. So for the sold item, we put a negative because this will reduce our stock value. This will reduce our stock quantity. So what figure to use? Use the immediate figure here. And what is the total value for, or the total cost for this 400 unit? 2296. And we do the sum up. So up to 31st of December, we have 1,004 units. The value is 8,029, and the weighted average price is $5.74. Next, on 28th, which is the last transaction, we sold 500 units 28th of December, we sold 800 units, so we put a negative amount for the sold item. What is the cost? We use the immediate weighted average price. And what is the value? 4,592. And I think I have some mistake here. This sold should be 700 units. Apologize. 700 units, 800, 300, and then 400, and this should be 500. Alright, so our answer is correct now. Okay, so we have 700 units as the closing value, as the closing quantity, and the total value is 4,094. Apologize for the key mistake, so you have to be very careful when you key in the data. So for this exercise, we can know that the remaining stock in the company is 700, and they have a weighted average cost of $5.85 each, and the total value is 4,094. So this is weighted average method. So I repeat again, for weighted average method, we only use one column. For the purchase, we put a positive because this will increase the total quantity. For the sold item, we put a negative, and again, we ignore all the selling price. We only focus on the cost. So that's all for the demonstration for classroom exercise 7.7, and you can try 7.8 and 7.9 yourself. And that's all for the part 2 video for your chapter 7. If you have questions, you can leave me a message in LMS or ask me through the email or the comment function in the YouTube. So that's all, and see you later.